This is Public Forum Debate. Here we are going to cover rebuttal arguments for the cryptocurrency topic, that is the November/December topic. First, let's begin with arguments against pro-arguments, that is, arguments that you can run in rebuttal speech when you are on the con side. First, we start with consumer protection. The pro side argues that regulation would increase protection of consumer assets and transactions. The response would come from Howell and Pottgeister in 2019 from Indiana University. They hold that consumer protection laws empirically fail, for example in Japan. In Japan in April 2017, laws were passed requiring cryptocurrency exchanges to register with the Financial Services Agency. When the coin check theft occurred, the Financial Service Agency was unable to do more than request the firm improve its security processes. This had little effect on the propensity for thefts of Japanese registered exchanges to occur, as observed with the recent Binance theft. In summary, this article holds that consumer protection laws are not working. The second argument that a pro team could run is that cryptocurrency would decrease illegal activity through regulation. The response, however, would be that criminals can still use fiat currency like the US dollar. According to Rebuttal in 2015, in spite of the rise of cybercrime, money laundering methods detected by law enforcement remain overwhelmingly traditional. Cash is still one of the preferred methods used to launder the proceeds of crime. All crime types make use of cash to facilitate money laundering at some stage, not only traditional crimes which generate cash profits, but also threats now arising from technologies such as virtual currencies, where cash is used as an instrument to disguise the criminal origin of proceeds. The third argument that the pro could run, amongst many others, would be economic growth. They would hold that regulation promotes cryptocurrency and thus economic growth. The response would be that regardless of regulation, cryptocurrency will still grow, according to Crawley in 2020 from CoinDesk. The global cryptocurrency market will hit $4.94 billion by 2030, more than triple its estimated size of $1.49 billion in 2020, according to a new study. This means regardless of regulation, cryptocurrency will still face an economic boom. Note, it may be important to research a more detailed analysis of US market growth in cryptocurrency rather than this global cryptocurrency market research. Now we move to pro arguments, that is, arguments you run in the rebuttal against con arguments. First, the con could talk about investor flight. They could say that regulation causes investors to exit the United States cryptocurrency market. The response is that empirics disprove. According to Feinstein and Werbach in 2021 from Wharton Business School at the University of Pennsylvania, they examined if price declines follow cryptocurrency regulation in a country. The answer is almost always not. This finding was the result of an exhaustive study by Feinstein and Werbach of trading activity at several exchanges worldwide following key cryptocurrency regulatory announcements. The study found almost entirely null results. From the creation of bespoke licensing regimes to targeted anti-money laundering and anti-fraud enforcement actions, we found no systemic evidence that regulatory measures caused traders to flee or enter the affected jurisdictions. Their findings at last provide an empirical basis for regulation of cryptocurrency trading, they added. This is a really good piece of evidence to hold that investor flight empirically doesn't happen. Then the con team could run that regulation would be ineffective. They would basically say that regulation would be ineffective, perhaps because it's difficult to enforce. The response would be that the government already has regulatory agencies in place. All it needs to do is allow for more clarity for these agencies to regulate. Look to the Andre Vlad evidence in 2019 that finds cryptocurrencies are regulated in the US by several institutions: CFTC, Commodities Future Trading Commission, the SEC, the Security Exchange Commission, and the IRS, the Internal Revenue Services. Regulation has already started with the fiat on-ramps and adherence to strict KYC, that is know your customer, and AML, anti-money laundering legislation. If anything, legislation and more regulation would promote specialization of each agency to regulate cryptocurrency. A second response would be that the industry can help regulate. According to Nikhilesh Day in 2021 from CoinDesk, cryptocurrency exchange Coinbase is preparing to pitch a proposed regulatory framework to federal officials. Legal experts told CoinDesk the regulator might be comparing lend to stocks or certificates of interest, which are securities under the SEC's purview. In essence, this article argues that regulation could be provided in regulatorily basically ideas could be promoted by industry leaders to help the government understand how to regulate the industry. Another argument the con could run would be innovation. They could say that regulation decreases innovation in the cryptocurrency and blockchain industry. However, the response would be that innovation in itself, particularly in blockchain, is not beneficial. According to Bruce Schneier in 2019 of Wired, various supply chain security systems are using blockchain. However, a blockchain isn't a necessary feature of any of them. The reason they're successful is that everyone has a single software platform to enter their data in. Blockchain can't be replaced by algorithms and protocols. It's much more social than that. A blockchain probably doesn't solve the security problems that you think it does. The security problems it solves are probably not the ones you have, such as manipulating audit data is probably not your major security risk. A false trust in blockchain can itself be a security risk. The inefficiencies, especially in scaling, are probably not worth it. I've looked at many blockchain applications, and all of them could achieve the same security properties without using a blockchain. Thank you for watching. If you have any ideas for videos, please leave them in the comments below.